earnings conference call of Mrs. Bector Food Specialities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anup Bector, Managing Director and Promoter. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone. On behalf of Mrs. Bector Food Specialities Limited, I extend a very warm welcome to all participants on Q1FY25 financial results discussion call. Today on this call, I have with me Mr. Manu Talwar, our Chief Executive Officer, Mr. Ishan Bector, Whole-Time Director, Mr. Suvir Bector, Whole-Time Director, Mr. Arnav Jain, Chief Financial Officer, Mr. Praveen Kumar Goyal, Whole-Time Director. We also have Orient Capital with us on the call, who are our investor relations advisor. I hope everyone had a chance to review our investor deck and press release, which was uploaded on the exchanges and our company website. The company has started the first quarter of financial year 25 on a positive note with a 17% increase in revenue from operations and a robust gross margin of 48%. Both the business segments, biscuits and bakery, continue to exhibit strong growth trajectory. I would also like to highlight that this is our highest ever quarterly revenues. While India's consumption story remains firm, the nation underwent a long schedule of Lok Sabha elections in this quarter, followed by anticipation of results and an impending full union budget. This is on the back of extreme heat waves during this period, made for a steady but markedly cautious consumption pattern. As an organization, Mrs. Bector's journey of expanding both domestic and international business continues to progress well. Our business philosophy is driven by developing robust product portfolios, investment in building brands, and setting up state-of-art supply chain and manufacturing setup. We remain committed to that. Our focus continues to bring in technology-led intervention for enhancing sales and distribution through SFA and DMS implementation. In this quarter, we piloted handheld devices for our frontline bakery sales team for real-time billing and improving turnaround time. We believe this will boost in increasing efficiency and in turn improve ROI for our channel partners. Our next step in technology adoption journey is to focus on supply chain and manufacturing over the period of next 24 months. On the export side, I'm happy to share with you that our company has reached to 70 plus countries, with your preferred Cremica brand having a footprint in over 65 countries. We will continue to follow our stated strategy of calibrated expansion. In terms of brand initiatives, to mark the occasion of World Health Day, English Oven came up with a Slice of Trust campaign, highlighting the goodness of fiber in our select range of breads. This was followed by contextual participation of Cremica biscuits in the highly visible Lok Sabha election campaign on news channels. Towards the end of the quarter, Mother's Day campaign, Ma Se Happiness, a campaign close to my heart, witnessed enthusiastic participation from mothers across the country. On new products induction, being in touch with evolving consumer needs, we launched the English Oven Zero Maida, 100% atta, no palm oil, and no artificial preservative bread on e-commerce at Rs 60 for 350 grams, which has been received very well. We also introduced Cremica Non-Stop Crackers, which is baked not fried, at Rs 10 for 25 grams. Our innovative frozen bakery products, as I had mentioned in our last call, also continues to grow. Updating on our capex plan, on the biscuits front, we have commissioned one more biscuit line in Rajpura in Q1, and one more line is expected to be added in Q2. Commissioning of Madhya Pradesh plant is also expected in the current financial year. On the bakery front, construction of a building for a Khopoli factory in Maharashtra will be commissioned in the current financial year. In the previous quarter, we embarked on Project Impact 1, a comprehensive initiative aimed at transforming our cost structure across organization. This ongoing journey will help the company to continue its path of sustainable growth. Financial performance. Now I will discuss the financial performance. Biscuits. On our biscuits segment, reported a revenue growth of 23%, which stood at INR 273 crores in Q1 FY25 as compared to INR 223 crores in Q1 FY24. This segment has grown by 53% over Q1 FY23. Bakery. Our bakery segment revenue of Q1 25 stood at INR 154 crores against 135 crores in Q1 FY24, thus registering a growth of 14% year-on-year basis, including retail bakery and institutional segments. This segment has grown by 44% over Q1 FY23. The consolidated revenues for the current quarter stood at INR 439 crores versus INR 374 crores in Q1 FY24, thus registering a growth of 17% on a year-on-year basis. EBITDA stood at INR 64 crores in Q1 FY25, resulting in a growth of 10.5% from the corresponding quarter on a year-on-year basis. EBITDA margins for the quarter stood at 14.6%. PAT stood at INR 35 crores in Q1 FY25 and saw a growth of 1.7% on a year-on-year basis. Our PAT margin for Q1 25 was 8.1%. With this, I would request to open the floor for question and answer. Thank you so much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. First question is from the line of Percy from IIFL Securities. Please go ahead.
Hi, sir. Can you give us a breakup of this year's 350 crore capex in terms of locations as well as whether it is bakery or biscuit?
So, Manu, this side, this year capex, which we will spend is primarily large part of that is on two specific plants which were mentioned by the managing director in his opening speech, which is MP plant for biscuits in Indore, and second is a Khopoli plant in Maharashtra, which is in close to Mumbai, and there are some other projects which are there. So largely, a large amount of investment out of this is going for two large plants which are setting, one for biscuit in Indore and one for bakery in Mumbai.
And am I right in assuming that the total amount is 350 crore for this year?
Yes, the total amount is approximately 350 crores for this financial year.
Okay. So these two plants would account for somewhere around 270 to 80 out of the 350?
Yeah, approximately that much in that range. Yes. There are other smaller investments. Some investment we are doing in a current existing bakery in Noida, and there are other few investments which are there, which are a normal year-on-year investment. But yes, what you said, it will be in ballpark that number.
And both these are greenfield, right?
Both are greenfield, absolutely.
Right, right. Sorry to dwell a little deeper, but will you be able to tell me which one is the larger of the two in terms of the capital outlay, Khopoli or MP?
So Khopoli is a larger outlay, and there is a reason for that. Let me also explain that. See, in a biscuit plant, we are creating a larger infrastructure because these are both greenfield plants, and we will have a space to keep adding lines in the future. And in case of Khopoli plant, bakery plant, because normally you have to put a line based on the capacity for next few years. So that's always a difference between biscuit and bakery. So bakery capacities are put taking horizon of 5-7 years. In the case of biscuit, we are creating a larger building infrastructure, common facility, utility, and we're putting up 2 lines to start with, and in future as we need, we can keep adding that.
Understood. And with this 350 crore of capex, assuming that whenever it is fully utilized, that would be able to generate a turnover of how much?
So, as on a 100% usage, when these two kind of capacities come in place, and also the capacity which we already have, on a 100% utilization, we can almost touch close to 2,900 crores.
Okay, but practically speaking, we would sort of start doing capex when we are at somewhere around 80%, right?
Yes, you're very right. In those particular territories.
Understood. So basically, with this, sorry.
So those particular territories, yes, but other territories where we are growing or we have to newly start the business, we would definitely need investment.
Understood. So with this heavy capex done in FY25, should we be right in estimating that FY26 and 27 put together would be like just mainly maintenance, like 50 crore each or something like that? Would that be a right assumption? And then FY28 might see another big one?
No, it won't be. Actually, we are just in the process of finalizing our layout for 26 and 27, right? So probably in the next call we'll be able to talk about, but it will be definitely more than that. Because, when we are in a growth mode, we need to have our supply chain capacity well in place, right? And as I explained to you, especially in case of bakery, we need to have those capacities well in place for next few years, because we can't keep adding capacity on a yearly basis. Normally you add capacity to take care of good next 4 to 5 years or more than that in that particular geographical area.
Right. Understood. Coming on to the biscuit segment, you have grown 23%, but any rough idea on what would be the domestic growth out of this?
So as we briefed in the last call also, and we can see the consumer trends, so biscuit growth have kind of slowed down over the last 2 quarters in the domestic side. But yes, we saw this quarter being better than last quarter. So that was
Sorry, lost you, sir. Hello?
That we briefed in the last call also, and as you can see, all consumer businesses, even in our industry of biscuits, have kind of slowed down on growth over the last 2 quarters. But the good news is that this quarter we saw a better movement up versus the peak.
Right. That's very heartening. So, roughly, since the average is 23% domestic and export put together, how much is the divergence? Like, is it 1,000 basis points divergence between the two, or lesser than that?
We at this stage don't share growth separately for both the businesses, both on the bakery and biscuit side. So I think I've given you a good indicative number.
Okay.
How this goes.
Understood. And finally,
Mr. Percy, may we please request you to join the queue? Thank you. The next question is from the line of Harit Kapoor from Investec. Please go ahead.
Hi, good evening. I just had 2 or 3 questions.
Sorry to interrupt, Mr. Kapoor. Your voice is sounding low.
Is this better?
Yes, please go ahead.
Okay. The first question was on the bread side. So this quarter has been a bit slower at 14% growth. Would this largely have been on account of B2B, given that the burger players have continued to see slow rates of growth? Is that the key reason why growth rates are a little slow? Is B2B the key reason? Is my question.
So no, the bigger reason for this first quarter was, you see, as we know, Navratri sometimes falls in the quarter 4, which is March, sometimes it falls in April. So this time Navratri was in April, so that was one reason for that. And second reason was definitely the very extreme summer in the North India, which is largest contributor of business for us on the bakery side. So that was second big reason. Yes, definitely, large part of QSR business, as we know from all published results, has been on a little slow one. But yes, with the frozen range which we have introduced last year and started adding customers and the ranges to our existing customers, is giving a good fill up on the B2B business side, on the frozen side.
Understood, sir. And the second thing was, the 17.7% revenue growth overall. I remember last quarter you said, volume growth is the primary driver here. There isn't much on the pricing. Would it be fair to assume that volume growth is large? It's almost entirely volume driven with 17.7% growth.
So yes, it's largely. Let me use the word largely volume growth. And a fair amount of growth is coming from a volume growth of this. Not entirely. Yes, fair amount of growth is coming from the volume.
And my last question was on the biscuit side. There's been talks of higher promotional intensity for the last couple of quarters, and I hear even smaller players, outside yourself, have been significantly competitive, especially at the low end. Just wanted to get a sense from you about whether this is a pressure point for growth or a pressure point for gross margins, because you have delivered very good gross margins. But just wanted to get your sense about what you are seeing on the ground right now on the biscuit side, especially on the competitive intensity, promotional intensity, etc.
So yes, you're right. Over the last 2.5 quarters, the competition intensity has increased quite significantly, especially on account of the market leaders taking an aggressive stance on consumer promotions across the varieties. And thus, we also had to, join to ensure that we are able to, kind of retain our market share. The good news is that, we in this journey over the last 2 quarters, we have very well retained our market share. So with our intervention on the distribution side, our intervention to match the, or to play our part on the consumer promotion for the consumers, we have been able to very well retain our market shares over the last 2 quarters and not lose an inch of space there. And this was very important to do. And also, it is also rescheduling our marketing budget more towards the consumer side than with the brand side. These are some of the strategic changes we did over the last 2.5 quarters to have a fair play in the market.
Got it. I'll come back for more. Thank you.
Thank you. Next question is from the line of Amit Purohit from Elara Capital. Please go ahead.
Yes, sir. Thank you for the opportunity and congrats on good numbers in revenue terms. Sir, on the export side, what would be the growth drivers now? I mean, if you could give some flavor on terms of the growth has been driven by one client addition or same. I understand you have expansion plans in Middle East as well as in US, but if you could provide some more details on that.
Hi, I'll answer this. So in the exports front, it's not coming from a single geography, but it's just our team is working towards all the territories, and we're trying to have associations with a lot of the retailers worldwide who are liking the product quality, liking the taste, and are liking our ability to craft the product for them according to their taste and preferences. So we're building our presence in North America, South America, and the Middle East, and those are the areas where we're seeing major growth coming up from.
Sure. And actually, last year, if I look at it, you indicated that the biscuit segment grew at mid-teens. So implied, export would have grown significantly higher. So that momentum, one should expect it to continue, or you think that there could be further aggression in terms of the growth from here on, given the initial success that you would have got in some of the retailers?
So I'll let Manoj take over this question.
Yes. So we are seeing strong trends to continue in export. We are not seeing any signs of that trend, but obviously as the base keeps becoming bigger, you will not have the same rates of growth coming in, right, in sequential quarters. But yes, on the trend basis, we see good trends to continue on the international business.
Sure. And on the QIP that we planned, the usage of, this one is clearly, is it more to do with debt repayment and probably funding this 350 crores of capex? And you also indicated you have plans in 26 and 27 also. But those would be largely funded through internal accruals, or they will be also large enough for you to raise debt, or how do we think about, from a balance sheet perspective, the debt levels?
The first thing, Amit, just to put attention that our debt equity ratio continues to be strong, right? And it is just about 0.36%, right? So that's a strong debt equity ratio. We are investing for the future, and which we briefed you over, we're investing in the manufacturing facilities, right, to ensure that we have a stronger supply chain with the ability to continue producing world-class bakery and biscuits on the product line. Yes, so the fundraise which has been kind of planned in this financial year, it is primarily to fund this capex and to stay more conservative in our approach and not to have a higher debt on our balance sheet. So it's in line of that. Yes, so our cash flow even now is fairly strong with a debt equity of only 0.36. So that's not a challenge. It is just a more conservative approach to do that and fund this current capex. And I'm sure that we have enough cash flow to fund our future, capexes also, which will come up in 26, 27.
So just one follow-up on this. We had, I think, 225 odd crore. Machinery we would have bought for the capex, right? So post this QIP, would you look to repay it, or one should keep the debt levels the same since you have a fairly decent debt equity ratio?
So Amit, we would be able to share. So I'm saying the fundraise in this financial year, which we have kind of got passed through in the AGM and the board meeting, the modality and the usage of those funds will kind of follow. But yes, it will be fairly in the direction which you are talking about.
Okay. Thanks.
Thank you. Next question is from the line of Yash Goenka from Auriga Capital Advisors LLP. Please go ahead.
Hi, thank you for taking my question. What kind of demand are you seeing from the Q-commerce space for garlic bread, burger buns, pizza base, and kulchas?
So can you be a little closer to mic and louder?
Is it better?
No, it is not.
It is still sounding the same.
Is this better? Hello?
Yes, please go ahead.
Please try.
Hi, is it better?
Yes, please go ahead.
Yeah. What kind of demand are you seeing from the Q-commerce space for garlic breads, burger buns, and pizza base?
So I'll hand it over to Ishan to kind of take up this.
So, I think demand on the Q-commerce has been robust throughout. On pizza bases and burger buns, we are the market leaders in these segments. So I would say that we've seen a very, very positive response, not only on these products but overall as well. We have looked at launching. We have launched healthier products, as the managing director said. We have on Q-commerce launched the Zero Maida bread. For the first time, we have launched a product which is preservative free. For the first time, we have launched a product which has no palm oil. We have seen exceptional response. So I would say that on the Q-com, robust growth is there throughout, and we have a leadership position in these products that you are mentioning.
Can you comment on the growth rates?
For us, I would say modern trade and e-com is becoming a very, very strong thing. We are growing, I would say by 20% plus in these segments.
Okay, thanks a lot.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants in the conference, please restrict your questions to 2 per participants. If you have any follow-up questions, you may rejoin the queue. Next question is from the line of Rajit Agarwal from Atharva Investment Managers. Please go ahead.
Good afternoon, sir. I will just refer to the discussion on QIP, and I appreciate that you have planned out the usage of those funds. My request would be just one, that while it might be seen as conservative to reach out for easier capital, at the same time it leads to equity dilution, and that too at an expensive rate. I mean, from very beginning we have been taught that equity is more expensive, and with the kind of EBITDA and the strong balance sheet you have, I'm sure you can support a lot more capex than what you are going to do even in this year. So that's just an input. Any thoughts would be much appreciated.
So I appreciate your inputs, and definitely, that they are in the right direction. But this decision is really taken into account, the growth trajectory which company has and company wants to achieve, right? In the coming years. So keeping both things into consideration, right? It's a fairly long-term kind of decision to arrive at that. No doubt what you're saying is absolutely right. That equity is the cost of capital is the highest among any other source of fundraise. But it's a very thoughtful decision by the company and by the board, and duly supported by the shareholders, that looking at the growth trajectory which we want to achieve over the next few years, this is a right decision to go for.
All right, sir. Thank you. Thank you.
Thank you. Next question is from the line of Sohan Samanta from Centrum Broking. Please go ahead.
Yeah. Hello, sir. Thank you for giving the opportunity. So the 2 questions from my side. One is the gross margin. Like this quarter, we have almost the highest gross margin in last 14 quarters. So can you expect for this year, FY25, margin expansion of 100 and 120 bps of margin expansion can you expect for this year?
We just go a little slow in the second part of the question.
So basically, last year we had a gross margin of 46.7%. And this quarter we have seen that last 14 quarters we have achieved the highest gross margin, right? So do we expect any gross margin expansion for FY25?
Further, you asking, do we expect any further gross margin expansion?
Yeah, compared to FY24, yeah.
No, so see, this gross margin expansion has happened because of first is improvement in the premiumization realization. Second thing, it has happened on account of more favorable business mix towards export side. And third, it's also, third also happened because of, this revenue also includes the freight recovery from our export customers, and because of the Red Sea issue, those freights are little on a higher side. So these are the three reasons why it has happened. And correspondingly, if you look at in the other expense line, there's a marginal increase also sitting there, about I think 0.5. So if you kind of set out that's the right way it will be. That would be the right way to look at it.
Okay. Thank you. And so the last question, like currently we have a direct reach of I think 3.2 lakhs and indirect is more than 7 lakhs. So what is kind of target?
Direct reach is on the biscuit side, and our overall reach as reported by Asian Insight. So it's over 700,000 outlets.
So what kind of target we are looking for next couple of years?
As we said in the last call also, that our next target to achieve an overall reach over the next few years to hit a milestone of 1 million outlet target from 700,000. So that's a target which will take another few years, but that's our next goal to reach there.
Thank you, sir. That's all.
Thank you. Before we move to the next question, a reminder to the participant to ask a question. You may press star and 1. Next question is from the line of Mr. Percy from IIFL Securities. Please go ahead, sir.
Sir, I'm sorry if this question was answered. I was away for a while. If so, I will read the transcript. But if not, can you give some idea on your EBITDA margin? What do you see going ahead? This quarter, whatever you are done, is that a stable state kind of margin for us to take ahead?
Yes, sir. See that we have been maintaining that over the next few quarters, we will be maintaining our EBITDA within the range of 14 to 15%, right? And that's what, and then we will start our next level of journey of moving, upward side. So at least for next few quarters, we see some maintaining our EBITDA in this range.
Understood. And on domestic biscuits, while I know you're not giving the growth separately, could you tell us if, in your estimation, you have gained market share, and also which are the geographies in which the growth is significantly ahead of the company average growth? Company average as in for domestic biscuits.
So on a market share, as I said, our market share on overall basis, we have over the last 2 quarters maintained our market share, right? And if I remember right, over the last year, same period, we have a marginal over the last full year. So full year versus full year, there was some marginal gain. But yes, in this highly competitive actions and a very aggressive play by the market leaders, we have been able to very well retain our market share and our space in the market.
Got it, sir. And finally, on exports, the growth in exports is coming from sort of which geography and what type of clients? So is it like supermarket clients, or is it sort of contract manufacturing for some smaller brands there, or is it that you are selling in your own brands in the export? I'm sure it's a mix of all three, but where is the growth largely coming from?
Hi, Percy, this is Savir this side. So the growth we're experiencing is from South and North America. South America predominantly is where we're supplying our own Cremica branded products, which are going into the market, where we have distributors in a lot of the markets which are prevailing there, right? So we're experiencing a lot of growth from those territories. The second is North America. When you said clients, some of the clients which we are associated with are Walmart, Walgreens, CVS, Dollar General. So we are, supplying to these brands under their label. And with some of these retailers, we are also supplying them with Cremica label products. So it is a mix of a white branded, like a private label, and also a Cremica branded approach. And these two are the territories where we are experiencing major of our growth. And the third one is the Middle East, where our target market is the 6 GCC countries, where we have 2 employees who are based out of Dubai as well. And they are instrumental in going to the market, building our brand, finding distributors, and also making our products available in the local retail chains. So that is how we are trying to get the most out of our growth.
Okay, got it. Thank you very much. That's all from me.
Thank you. Next question is from the line of Priyank Chheda from Vallum Capital. Please go ahead.
Hi, sir. One observation, and would like to know your thoughts on it. So, the recent launches, if I have to track, so your whole of the portfolio, which what I see, has been in the price range of, say, 20 rupees to 30 rupees or 40 rupees per 100 grams. Now, the new launches which we have seen in the last quarter, which is around the cashew cookies, has been around, say, 13-14 rupees per 100 grams. Just to go back to the slide number 19, which is new launch of Butter Double Delight, it has been around, say, 13-14 rupees per 100 grams. So, do you find consumer getting downgraded and you also pivoting towards that end? Or you find a problem in the premium side of the portfolio, which might be under stress, and the competitive intensity getting intensive over there? What has been the strategy on the new launches, which we see the price points going downwards?
Okay, so let me first brief you that the company has a very clear-cut focus strategy on the premiumization. And if you look at our trends on premiumization over the past 2 years, you would have seen a very aggressive movement in our premiumization over the last 2 financial years and even now. So if I go back to premiumization 2 years back, when our premiumization was in a high 20s, right? It was 27, 28% kind of stuff. Where last year we came up to 37% of premiumization, and now we stand in the last 2 quarters. We stand at 39% premiumization on the biscuit side. Similarly, on the bakery side, we are sitting on a very healthy premiumization, and we kind of moving in our premiumization on value terms. In volume terms, we're sitting at a premiumization of almost 56%, and value terms it translates into 62% contribution of the premium kind of product. So first is that, yes, the premiumization is the way which the company is progressing and has progressed well over the last 2 years. coming to one or two examples which you have given, they were, as we particularly know that the competition, the hyper competition drawn in by the aggressive consumer promotions and other things being done by the market leaders, we had to come and participate to protect our ground. And the butter delight is a step up on the butter, right? It's not we have downgraded that entire range, which is really big in some of our territories. So we have only upped and give a consumer a superior product at a superior pricing to kind of maintain our lead in this particular product line. So premiumization is the way forward. And Ishan also had just recently briefed you on the kind of product on the health side with no palm oil, and we have launched, and that's also all in that direction. Similarly, on the bakery side, on the B2B side, the amount of frozen products which we have launched over the last 9 to 12 months side and build our business on the frozen category side, that again is on a premiumization journey. So that premiumization is the way company has been living a life and growing that very well. As I said, gave you the numbers over the last 2 years, and that's the way it will continue. And the same is in the export side also, and we very well seeing that premiumization of journey on exports is also continuing and moving in the right direction.
Perfect. And sir, would it be possible to share which are the top selling biscuits, or maybe you can share the top selling SKUs, or maybe a top 5 biscuits for us in terms of the revenue scale? It would be great.
So Percy, can somebody get back to you separately on this, because let's give some other people also some chance to ask questions. Definitely.
Thank you.
Somebody
Thank you, sir.
will get back to you on that.
Thank you. Next question is from the line of Harit Kapoor from Investec. Please go ahead.
I just had a follow-up. This quarter, we've seen continued competitive intensity. There were some one-off challenges on the heat wave and out of home as well. And we all know how QSR businesses are operating currently. Would it be safe to assume that the growth has come in spite of all this, and if you do see improvements at a macro, growth can accelerate even from here? Is that the right way to think about how this year should pan out?
So Harit, as I was briefing you earlier also, that let Ishan, I think he'll be able to explain you better that how he built up the whole frozen range of new product development and how it's helping us in the revenue growth management. Ishan, would you take up that?
Yeah. So, Harit, a biggest part of our portfolio on the B2B side is burger buns, right? And I'm sure you know from the market trends, I don't think it's been growing very well. Though we strongly feel and we are very bullish that market trends will improve, new store additions will happen, because there is also a lot of competition intensity on the QSR front, right? So yes, I feel that as stronger growth rates come up, that will definitely support the growth of the B2B business. Other than that, what we have been also focusing on is getting into non-bun businesses, right? To reduce our dependency on one product category, and I think that story is playing out very well. On the frozen side, I think we've done a very good job. We are still very, very nascent on frozen desserts as a category, which we see has a big potential, because whether it is our existing customers or opening new customers, this kind of product portfolio will definitely strengthen our position. So yes, we feel that good growth
should lie ahead.
Great. Thanks, Ishant, for this. That was my follow-up. Thank you.
Thank you. Next question is from the line of Amit Purohit from Elara Capital. Please go ahead.
Yeah, thank you for the follow-up, sir. Sir, on the biscuit again, you had highlighted last year that mid-teens kind of growth. So in the context that we are in, where there is competitive intensity and overall slow down in consumption generally, would you maintain that that kind of a domestic growth outlook could continue this year as well, or you think there could be some challenges here?
So Amit, as I briefed you earlier, that the consumer offtake slowdown for the industry, competition intensity, both have, the competition intensity has increased, and we very well know that consumer offtakes for the industry have slowed down post Diwali over the last 2.5, 3 quarters, right? Our first motto was to ensure that we hold our ground in this competition intensity and don't lose an inch of our space and maintain our market share. So I just want to confirm that we've done that over the last 2 quarters of overall maintaining our market share and participating in this highly competitive market to hold our ground and maintain our market share. Second thing I said was that this quarter, compared to the previous quarter, the preceding quarter, it has shown some forward movement. And coming Diwali season, we are very, very hopeful that it will be a start of a turnaround for the industry itself, right? Because we are a smaller part of the industry, and we're very hopeful that with our continued focus on distribution and marketing and duly supported by the festive season which is coming, it should move in the right direction.
Sure. So second half one should start building in a better outlook, and Q2 would still be some challenges with that.
Yes, I said that Q1 was better than Q4 of last financial year, and definitely we expect Q2 also to be better than the previous quarter, and then coming next quarter, which is the festive quarter, it should definitely start further improvement, and it should keep scaling up every quarter. That's what we as of now foresee.
Sure. Thanks a lot.
Thank you. Participants, to ask a question, you may press star and 1. Next question is from the line of Gurmeet Singh, who is an individual investor. Please go ahead.
Good evening, everyone. Our net profit growth for the quarter is less than 10% compared to 17% revenue growth, even after premiumization and benefit of scale. What can be the reason?
Yeah. So, absolutely, you're right that our EBITDA growth is 10% versus our revenue growth of 17%, and it is on account of 2, 3 reasons. One is that our export contribution is higher, and because of export contribution being higher, we have a higher logistics cost kind of coming in. So the ocean freight has kind of gone up there. Second is that because of hyper competition, we have invested more in the marketing, the promotion side. Third, we see the financials that our employee cost is higher than previous year, and that's higher largely one because of the reason that we added new lines in Rajpura. Last year we added one line in this year. We added a new plant in Bhiwadi bakery. So we need to put the organization people in place, and the utilization keeps improves quarter on quarter for these lines. So that's also impacting the the cost, employee cost, and plus some bit of last leg of strengthening of the leadership was required, which we have done, which will kind of get normalized over the next few quarters. So these are the few reasons why you see that. This is the reason, and which, as I said, you will see over the next 3-4 quarters that will get normalized.
Okay, thank you. Thanks.
Thank you. Next question is from the line of Chirag Lodaya from ValueQuest. Please go ahead.
Thank you for the opportunity. Sir, if you can talk more about the frozen dessert category, how big is the opportunity here and, what to expect over the next 3 to 4 years?
See, we are very new in this category. But what this also does is open up the HoReCa channel for us, right? It's not only the QSR channel, it also opens up the HoReCa channel, where is actually, if you ask me, a new line of business for us, right? I think it also adds, as we are seeing, whether it is McDonald's or Burger King or Rebel Foods. Today, they are introducing cafe models. Rebel Foods also has its own brand of frozen, of desserts, right? So, what I see is that the industry is definitely gravitating towards this. I feel that a lot of new customer acquisition will be in the pipeline. I really cannot put a figure to the size of the industry, but for us it is a natural extension. As we aspire not to be only a bread company, right? We aspire to be a bakery, and it is part of that broader vision where we have an entire portfolio of products for a customer. Whether it be desserts or whether it be savory products or whether it be a burger bun or a pizza base. So for us it's a very positive outlook, and we are going to be looking at scaling this in both the north market and the west market.
Any specific product you would like to highlight, which is doing well, or some sense on what kind of products we are doing and what kind of investments you would have done so far?
See, investments are not very large in this. These are like I said, a natural extension of our bakery. These are smaller investments, but what we are using to our advantage, is we are creating a frozen chain between all our factories, right? So whether it is Delhi or whether it is Mumbai or whether it is Bangalore, all these factories, because you see at the end of the day, on the frozen side, logistic cost is an extremely important cost. Our multi-locational facilities and having the ability to create frozen products out of multiple facilities will give us definitely a competitive advantage, right? So that is the thought process behind it, and each bakery would be an independent bakery with multiple products, with certain product lines.
Some sense of products. Currently, what kind of products you would be doing?
So it could be on the dessert side, muffins, cookies, cakes. Products like specialty products like skillet cookies. On the bread side, it could be frozen paninis, footlong breads, center-filled puffs. So these are all the kind of products that we are looking at. Cheesecakes.
Right. No, I got the idea. That's good. Right. And just lastly, if you can call out A&P for the quarter and YOY.
The what?
Advertisement spends for the quarter and YOY.
So consumer spends and advertisement spend for the B2C business, they are ranging between 3 to 3.5%. So we consistently maintaining that investment. So consumer promotion, marketing, brand, product promotions. That's on B2C business around 3.5.
So YOY as a percentage of sales on B2C, it is more or less flat. That is what you are saying, right?
Yes. So yes, it's around 3.5%. I will have to check last year same quarter what it was. So we can check and get back to you on that. But yes, so this quarter.
Sure. Thank you and all the best.
Thank you. Next follow-up question is from the line of Sohan Samanta from Centrum Broking. Please go ahead.
Yeah, thank you, sir, for the follow-up. Sir, last quarter we have launched this cake. So how is the performance? If you can give an update on that.
Sorry, which cake you're talking about?
So in last call, in last call you mentioned some 10 rupees cakes you have also launched. So not frozen.
So that product is is more of a product to support distribution, right? For us, our focus will always be on premiumization, right? I mean, we have launched the Zero Maida bread, right? I would be more excited to talk of a product which is, let's say, 60 rupees for 350 grams rather than a 10 rupees cake. That is more of a, tactical call for, improving efficiencies of distributors and all of these things. But as a premiumization journey goes, we would focus more on healthier products, as the industry is shifting, gravitate towards the shift rather than, de-premiumize.
Got it. And then last thing, last quarter I acquired this Cremica bakery brand. So what is the update right now? Any CapEx plan or something on that?
Pardon? Can you just repeat, please?
The Cremica bakery brand you have acquired.
So we're still in the process. The process is not completed yet. It's completely updated.
Okay.
I'll take this. Yeah, the Cremica brand deal, is in the pipeline. So we are clearing, we've given it to the legal. So once it is, we get the response from legal, it will be done. But otherwise, I think it's a process of another 2-3 months, but it will happen.
Okay. Thank you, sir.
Yeah. Okay.
Thank you. Ladies and gentlemen, in the interest of time, this would be our last question for the day. I would now like to hand the conference over to Mr. Anup Bector for the closing comments.
Yeah. Thank you, everyone, for joining us. I hope we have been able to answer all your queries. In case you require any further details, you may please contact us or Orient Capital, our investor relations partner. Thank you.
Thank you very much. On behalf of Mrs. Bectors Food Specialities Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.